Welcome to our in-depth exploration of the secret history of digital money. In this video, we'll explore the fascinating evolution of currency, tracing its journey from primitive forms like beads and shells to the revolutionary digital currencies we use today, such as Bitcoin. Money has always been a reflection of society's needs and technological advancements. From the earliest days of barter systems to the introduction of coins and paper notes, each step has paved the way for the complex financial systems we navigate today. As we venture into the world of digital money, we'll uncover how the internet and blockchain technology have transformed the way we think about value and transactions. Digital currencies represent a significant shift in our economic landscape. Understanding this evolution is important, especially in today's fast-paced economy, where innovative financial technologies are challenging traditional banking systems. We'll explore the key milestones that have shaped digital money. So, buckle up as we unravel the secrets behind digital money and its impact on our lives. The origins of money. To understand the evolution of digital money, we must first look back at the origins of currency itself. In ancient times, people relied on barter systems, exchanging goods and services directly without a standardized medium of exchange. However, this method had its limitations, as it required both parties to want what the other offered. To overcome this challenge, early societies began using various items as currency, including beads, shells, and even livestock. Beads, often made from materials like clay or stone, were among the first forms of currency. They were lightweight, easy to carry, and could be crafted in various shapes and colors, making them desirable for trade. Similarly, cowrie shells became widely used in many cultures due to their durability and unique appearance. These primitive currencies facilitated trade and commerce by providing a more efficient means of exchange, allowing people to assign value to goods and services without the need for direct barter. As societies evolved, the limitations of these early currencies became apparent, leading to the transition towards standardized forms of money. This shift marked a significant milestone in economic history, as it allowed for greater efficiency in trade, the establishment of markets, and the growth of economies. The introduction of coins and, eventually, paper money paved the way for the complex financial systems we rely on today, setting the stage for the digital currencies that would follow. The rise of coinage. The introduction of metal coins marked a pivotal moment in the history of money, revolutionizing trade and commerce. The first known coins were minted in Lydia, an ancient kingdom located in what is now Turkey, around 600 BC. These coins were made from electrum, a natural alloy of gold and silver, and featured stamped images that indicated their authenticity and value. This innovation not only provided a reliable medium of exchange, but also laid the groundwork for the standardized currency systems we know today. Coinage simplified transactions by establishing a consistent value for goods and services. Before coins, trade often relied on barter, which could be cumbersome and inefficient. With coins, merchants and consumers could easily assess the worth of items, facilitating smoother exchanges and encouraging trade across longer distances. This standardization of value helped to stimulate economic growth, as it allowed for the development of markets and the expansion of commerce. Beyond their practical uses, coins also held significant cultural importance in ancient societies. They often featured images of rulers, deities, or symbols that reflected the values and beliefs of the time. Coins served not only as currency, but also as a means of communication, spreading messages about power, wealth, and identity. As societies began to mint their own coins, they fostered a sense of unity and pride, reinforcing the connection between currency and culture. This rich history of coinage set the stage for the complex financial systems that would evolve in the centuries to come. Paper money and banking. The evolution of paper currency marked a significant advancement in the history of money. with its origins tracing back to China during the Tang Dynasty, 618 to 907 AD. Initially, merchants began using promissory notes as a means to facilitate trade, which eventually led to the government issuing official paper currency. This innovation allowed for easier transactions, as carrying large amounts of metal coins became impractical. The use of paper money spread rapidly, revolutionizing commerce and laying the groundwork for modern financial systems. As trade expanded, the establishment of banking systems became essential. Banks emerged as institutions that not only issued currency, but also facilitated trade by providing loans and safeguarding deposits. They played a crucial role in the economy by enabling individuals and businesses to access credit, which stimulated economic growth and allowed for larger-scale transactions. The ability to deposit and withdraw money easily transformed the way people conducted business, making trade more efficient and accessible. The introduction of the gold standard in the 19th century further shaped global economies. Under this system, paper money was backed by a specific amount of gold, ensuring its value and instilling confidence in the currency. This connection between currency and gold facilitated international trade, as countries could exchange money based on a standardized value. However, the gold standard also had its drawbacks, leading to economic instability during times of crisis. Ultimately, the evolution of paper money and banking systems laid the foundation for the complex financial landscape we navigate today. The digital revolution. The shift from physical to digital forms of money has transformed the way we conduct financial transactions, marking a significant milestone in the evolution of currency. One of the earliest signs of this transformation was the emergence of credit cards in the mid-20th century. These cards allowed consumers to make purchases without the need for cash, paving the way for electronic funds transfer, EFT. EFT systems enabled money to be transferred electronically between banks, streamlining transactions and making payments faster and more efficient. The role of the internet in this digital revolution is overwhelming. With the rise of online shopping and e-commerce, consumers began to demand more convenient payment options. This led to the development of secure online payment systems, allowing users to make purchases from the comfort of their homes. The internet not only facilitated these transactions, but also provided a platform for financial institutions to innovate and offer new services. As technology advanced, online banking and digital wallets emerged as popular alternatives to traditional banking methods. Online banking allows customers to manage their accounts, pay bills, and transfer money with just a few clicks, eliminating the need for physical bank visits. Digital wallets such as PayPal and Apple Pay further simplify transactions by storing payment information securely and enabling quick payments through smartphones. This shift to digital forms of money has not only enhanced convenience, but also reshaped our understanding of value and financial interactions in an increasingly connected world. The birth of cryptocurrency. The concept of cryptocurrency emerged as a groundbreaking innovation in the financial landscape, fundamentally changing how we perceive and use money. The creation of Bitcoin in 2009 by an anonymous individual or group known as Satoshi Nakamoto marked the beginning of this digital currency revolution. Bitcoin was designed as a decentralized form of money that operates independently of traditional banking systems, allowing users to send and receive payments directly without intermediaries. At the heart of Bitcoin and other cryptocurrencies lies blockchain technology, which ensures security and transparency in transactions. A blockchain is a distributed ledger that records all transactions across a network of computers. Each transaction is grouped into a block, which is then linked to the previous block, creating a secure chain. This decentralized nature makes it nearly impossible to alter or counterfeit transactions, as any changes would require consensus from the majority of the network. As a result, Blockchain technology has gained recognition for its potential to enhance security in various applications beyond just cryptocurrency. The growing popularity and acceptance of cryptocurrencies have been remarkable. Initially met with skepticism, cryptocurrencies have gained traction among investors, businesses, and consumers alike. Major companies now accept Bitcoin and other digital currencies as payment, and a plethora of alternative cryptocurrencies, or altcoins, have emerged, each with unique features and use cases. This increasing acceptance reflects a broader shift towards embracing digital assets, signaling a potential transformation in the future of finance, the future of digital money. As we look ahead, the future of digital money is poised for exciting developments, driven by emerging trends in digital currency and financial technology. One of the most significant trends is the potential rise of central bank digital currencies, CBDCs. Many countries are exploring the idea of issuing their own digital currencies, which their respective central banks would back. CBDCs could enhance the efficiency of payment systems, reduce transaction costs, and provide a secure alternative to private cryptocurrencies, potentially reshaping the global financial landscape. Fintech innovations are also set to have an impact on traditional banking. With the advent of mobile banking apps, peer-to-peer lending platforms, and blockchain-based solutions, financial technology is challenging conventional banking practices. These innovations offer consumers greater convenience, lower fees, and more personalized financial services. As fintech continues to evolve, traditional banks may need to adapt by embracing technology and collaborating with fintech companies to remain competitive. As digital finance expands, regulations and security become vital. With the rise of cryptocurrencies and digital transactions, regulatory frameworks will need to evolve to protect consumers and ensure market integrity. Additionally, as cyber threats become more sophisticated, robust security measures will be essential to safeguard digital assets and maintain trust in financial systems. Balancing innovation with regulation will be crucial in shaping a secure and efficient future for digital money, ensuring that it serves the needs of individuals and businesses alike. We've taken you on an incredible journey through the evolution of money, from the earliest forms like beads and shells to the revolutionary digital currency known as Bitcoin. This transformation highlights the significance of how our understanding of value and transactions has changed over time. Each step in this journey has paved the way for the complex financial systems we navigate today, culminating in the rise of digital money that is reshaping our economy. As we move forward in this digital age, understanding these changes not only helps us make better financial decisions, but also prepares us for the future of commerce and investment. Thank you for watching, and we look forward to seeing you next time.